Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 18th, 2016. Here's a look at the daily time frame of the ES. So far, what we've seen is a solid rebound off of support. We've had a major push down into the 1804 to 1811 zone. I mentioned any defense there, likely slingshots price back to 1921 with a shot to see 1939.5, which is the midpoint of the key range. So far we've been playing between 1921 and 1811 since the middle of January, and so far that rotation has played off 4 times now. Once down, back up, then down, then back up. So very solid movement here, and you should see price come into 1939.5 with a shot to even reach 50.5. But if price rotates into this zone, it may become short-term overbought, and you could see a return back downward at that point. Any push beyond, a push and a hold beyond 39.5 and 50.5, any hold beyond that zone would suggest a continuation back toward the top of the recent highs here, 2075. So right now, continuation to the upside, but we're going to watch for any signs of rejection at these levels or acceptance at these levels, as that will give us the next near-term move. But so far, look for a continuation higher. Pullback should be defended, and that's what we mentioned before. Any pullback likely into the LVN offers a buying opportunity for continuation higher. So looking at the intraday time frame, we've seen how bullish this reversal has been. A solid reversal here off of levels down below 1811s, and you've seen how aggressive this up move has been. So right now, if we drop into a lower time frame here, make it about 10,000 contracts per bar, what you'll see is a short-term support level that's come into play at about 917. We've also seen an opening key range develop, which could offer key ranges for the rest of the session. I would say above 1915, especially 1912, opens up a continuation toward 1939.5 and 1950.5. We also have the primary upside target for the day at 1948.75. So that tells you that there's a very good shot to see that continuation into 50.5 should price blow through that 39.5. Now, failure to hold above 1915, 1917 opens up a potential return across this narrow LVN back toward 5-day VPOC, which is 1889.5. Okay, let's take a look at crude oil. Here's crude oil. This is the new updated J contract, the April 2016 contract. So I have some of the key levels here updated for that new contract. You can see price attempted to hold below the bottom of the key range, which now spans from 29.88 up to 41.62. Failure to hold below that zone implied a slingshot back toward the center of the range, which is 35.75, and so far we're on that path. I mentioned the previous session that there are 2 days here where bears are defending these highs, but there are buy stops above. So any push beyond that zone, and that's what we're testing right now, easily squeezes back toward 75, 35.75 there. Now any push into that zone could be seen as a target zone and an area for bears to defend. So once we get into that area, very similar to the ES, we could begin to see a little bit of momentum lost, and that could lead to a return back downward. But we'll watch that for action around that level when it comes to there. Right now, above 33s opens the door to 35.75. Below 33s opens up a return back toward 31 for a retest. If we look at the intraday time frame right now, you can see prices have been trending higher, but we're now testing the previous week's high here at 33.70. That's a very important zone right there. Above that level, again, squeezes into those 35.75s, but failure to hold above that previous week's high will be an early sign of rejection, very similar to what we saw before. So failure to hold above this zone opens up a return to 5-day VPOC at 31.43. Now if we take a look at gold here in the higher time frame, you can see we've seen that big blow off top to the upside. That's what we were looking for before, this big type of move here where price just shot up and couldn't go anymore. That was going to lead to a return back toward recent support, and it did. Now we're seeing a very tightly coiled range here, and a hold above 1192 and a break back above 1215s opens up a return to 1239 and 1263 with a shot at new highs. Failure to hold 1192 opens up a move back across the range into previous composite VPOC, which is 1126.10 rather. So very important how this could play out in gold, and if you drop to the lower time frame, you can see how tightly coiled that range is. A lot of energy being built up in this range right now, and a breakout will spark the next major directional move. Again, above 1215, 1220 likely sparks a squeeze higher. Failure to hold these 1200s opens up a return to the previous week's low at 1164.50. All right, let's take a look now at the NQ. Here's the NQ in a daily time frame. We've seen a solid rejection off the recent lows. Prices were trading below 38.93 half. That pre-market morning, I mentioned any failure to hold below that level could slingshot price back to 42.26. Here we are about 4 or 5 days later, and you see that we've seen a solid rejection right into our 42.26. That's the midpoint of the August range. 38.93 half was the bottom of the August range, and we saw initial rejection here and a walk up, and then we saw the second rejection here, which led us to believe that we could be slingshotting back to 42.26. There's the move. We nailed it right here, and the expectation is to see how does price respond now above 42.26, because if we get a move as high as 43.11s, this is the last point where we've been seeing some movement before we've seen rejections lower. So any push into this area of price could see a return back downward. But if there's acceptance beyond 43.11 half or 42.26 short term, that could tell us that we're headed back toward 45.58, the top of the August range. So a lot of major turning points could be ahead, but we got the quick buy opportunity back toward 42.26. Now we have to see how does price play around this zone to give us indications whether we're headed up toward 45.58 or perhaps back toward recent lows for a retest. Looking at the intraday time frame for the NQ, what you'll see is an overnight key range that is developed. That's the key range to watch here for early directional movement. Additionally, we've seen a continuation into that 42.26, and we're seeing early rejection off that zone. Of course, we've developed a nice LVN support zone at 41.80. That's going to be a zone here where bulls want to continue to defend for continuations higher. Below 41.80 opens up a return to 41.30 half. Keep in mind, we've seen a very bullish uptrend, and right now the primary upside target for the day is 42.71 with a secondary at 43.01, which tells us we have a very good shot to see a push toward 4,300 by the end of the session. So let's see how this thing plays out as we head into the rest of the day. Good luck and trade well.